Alright, what I'm going to do today is show you opportunities, how to find trading opportunities, how to find low risk trading opportunities. And the tools I'll be using will be basically support and resistance. I'll be using your Fibonacci retracements, and I'm going to use the Ichimoku clouds. But what I do first, usually, I'm sure I trade off the hourly chart, so I usually go to the daily and I'll see what the trend is. The trend is down. It's been down since roughly April of last year, mid-April of last year, up till now. So that's a good year. Um, you could even go back on this thing and look on the monthly and see that it's been down in a downtrend for quite a while, and it's also at the lowest point that it's been in since I can see back in '77, as far back as I can see. So it's at its lowest of since a while. Um, okay, so we're going to go to the hourly chart and we're going to find out how do we find opportunities. How do we find opportunities? Okay, what I'll do here is get to my spot, and then we'll take this from, let's see, roughly, let's go from here and find opportunities to get in the market. Now I usually would have some support and resistance line drawn, and sometimes I don't use anything but support and resistance, but I'm going to use the Fibonacci's and the Ichimoku cloud. So what I do here is I look, you see this shooting star and a doji right in there next to it, and you're in a downtrend, so you're looking for shorts. So after you see that, that is signs that a reversal is in order. So it was going up, you looked at it's going to come down, come down. So after seeing this, you could say that would be an opportunity to get in the market. But to be even better, what I would do is draw my clouds in here. Um, insert the cloud. I keep the parameters, the default parameters, and I have my color set that I like, and I will not be using the chink span. Okay, and that's visual on all charts. Okay, so now we have it. Um, if you don't know much about the Ikumuku clouds and trading with them, I'm going to just show you a couple little things. This blue line here, the blue line is called your Kijinsen, and the green line is called your Tinkinson. And the cloud is your Kumo. You have a span A and a span B. The cloud acts as support and resistance. Here it will be support, and upper top it will be resistance. If you were coming up, it would be resistance A and then resistance B. And if you were coming down, it would be support A and support B, depending on where it was. Here, see, same thing. But we're looking, here's what we want to do. Usually getting in above the cloud to go low is, that's a weak sign. But what I like to do, I like to get in on the break of this, the Kijinsen span here, and I like to get in there a lot of times. So what I did here, I see this break, so I get in, boom. But it makes a doji, which says, oh, it's gonna go up a little. So it just did a little retrace. If you get in here, you get in after this break, you want to put your stop up above this green line, and you could put it even farther up here if you wanted to for technical reasons. I use technical stops. I try to find the spots where there's resistance or support and put a stop there. And a lot of people, you have to decide what's is best for you based on your money management rules. Okay, so we don't have a lot of time, so we say we get in here and the market came up a little. It didn't hit my stop, so I was good, and the market went down and I stayed in. There was no reason for me to get down, to get out. Usually what you want to do is you'll get out if you see the market come back against you and go across this the blue line again, which is your Kijisen. Now it came down, I got this long wick candle, so I would probably get out. Maybe I get out after this, but this long wick candle and I see it starting to go out, I say, okay, I got it, I'll get out. And how much did we get here if we did that? Say we got in right here. That's roughly what, 188 pips. Okay, if you catch that whole thing. Now, if you didn't catch that at all, and you were here and were like, oh, what do I do? How could I get back in? Now you see the market retracing a little, starting to go back up. So here's where you start. You're putting your fibs in. You put your fibs in. You draw from the nearest swing high to the nearest most recent swing low. Okay, and then you're looking here. I like to use the 32% retracement as my area where I'm looking for something. Usually you look at the 32%, the 50, and the 61. Anything going past there, you're looking at maybe this thing is going to go up to the, make a usually it'll make a double top or a double bottom. So what we do here, you look here, you're looking at the market retrace and going back and going back. So now I put my entry order in right here. After this break right here, after I see this candle break and come back down, I put entry order in and I put my stop right here above the 50% retracement, which is right here. I also have more resistance showing because the top of this cloud is resistance. So the top of that cloud right there, lining up with this 50% retracement, that's strong support for me to let me know that that's a good level to put it at. Doesn't mean it won't be broken, but it's a good spot. And I try to use more technical stops. So you got in there and you see the market was indecisive, but then finally it broke. Finally it broke down, went down, and then you could get out right here if you wanted to because you see it going back. No reason to get out if it doesn't break this cloud. You want to stay in probably. If you did get out and you got out here because you saw the long wick candle, which shows you that it may reverse, it's just a little signal, and you got out, you could also look to get back in again. So what you would do here to get in is now you broke the Kijinsen again. You broke that, so you put your entry order in. And now what I would do, you could put your stop above this green Tinkinson line, or you could put it above this candle here, where the above the cloud here, where the prior resistance was with this candle, and then you follow it through, and then you get another hammer down here, and if you wanted to, you could get out, but you try to let your profits run. So there's really no need to get out. This broke here, and then if you're nervous and say, well, I'm taking my money and run, you see this has been in a downtrend forever. So basically you want to just try to stay in, and it goes down here again and makes a nice long wick candle and a doji letting me know, okay, this thing may go back. So yeah, I'd probably get out here, and now I'm looking again for opportunities to get back in. What I could do, I'm waiting. It breaks this cloud here, this Kumo, and now we're saying, okay, well, maybe this thing is going to start to go back the other way. But no, got a little wick here. It came down, and then it came down again and broke the cloud, and the cloud stayed our purple color, which is the down, which basically is showing us the downtrend. When it's going up, sure, it doesn't have much here, but when it's moving up, you'll have a cross of the lines and it'll change colors to be brown. That's what I have mine set at. But anyway, where were we? We came here and we say, okay, this thing breaks right here. If it breaks this cloud, I'm gonna get in. This is my chance to get in. This is a low risk entry right here, and I put a stop right here. Could put my stop right here, or I can put my stop above this candle again. So let's see, what are we risking? 30 something pips if we put it there, and if we put it here, we're only risking like 14-15 pips, and we let that run, let it run, let it run. And those are opportunities for you to get into the market. There's still more opportunities I can show you, but I'm running low on time. What I'll do next time is I'll come back and show you what I think's going to happen, where we're going to start again. This is a Saturday, so there's no trading right now, and I'll show you what I think's going to happen for Monday and the rest of the week with this Swiss franc, dollar Swiss franc. But until then, I hope I helped you out a little bit and showed you some ideas that you can use. And until we get together again, God bless. So long.